Bitcoin has outperformed, or the NASDAQ has underperformed Bitcoin by 99.97% since 2012. So it's been a one-horse race right now. I call it the supermassive black hole. Will that always be prevalent? Maybe not. But it's very difficult. There are some clear winners that have done better. So NVIDIA has done well over that time, stuff like that. So again, all I do with that bet is this is all the same thing. The world is about to become more digital tomorrow. And these are the two mega horses in that race. How do you allocate your capital between the two? Depends on your risk profile, and depends on, what has got the relative kind of attention thrust or momentum at any one period of time. This year, it's been technology stocks. Last year, crypto massively outperformed. So what do you hold over an extended period of time? A bit of both.
Every major crypto cycle has a moment where the data becomes louder than the emotions, and right now, we're standing exactly in that pocket. Prices might look choppy on the surface, but underneath, the structure of this market is strengthening in a way that only long-term investors appreciate. Bitcoin is reclaiming dominance, liquidity is expanding globally, and large-scale capital is quietly repositioning itself into digital assets, not because of hype, but because the macro environment is finally aligning with the crypto thesis that investors have held for years. Raoul Pal's central point is that the rally we're seeing isn't a speculative accident. It's the result of deep, structural forces. Monetary conditions are easing worldwide, risk assets are absorbing fresh capital, and the financial plumbing behind ETFs has stabilized flows in a way that fundamentally changes market behavior. Add the fact that Bitcoin now serves as pristine collateral in a world that desperately needs collateral, and you begin to understand why the long-term chart still points upward even when the short-term candles look messy. But what makes this moment even more powerful is the collision of two megatrends, crypto and AI. Raoul argues that AI will not just use blockchain, it will depend on it. Autonomous agents need instant settlement, composable financial rails, and tokenized access to compute and data. That creates the largest real-world use case for blockchains we've ever seen. This is the part most people are underestimating. The next wave of adoption won't be driven by retail investors. It will be driven by machines. So when you hear Raoul talk about liquidity, technology, and long-term positioning, he's not describing a trade. He's describing the early stages of an economic transition. The clip you're about to watch lays out the foundation of that thesis. If you want practical, data-driven insight into how to position yourself for the next leg of this cycle, stay tuned. And before we dive in, hit like and subscribe so you don't miss the rest of this breakdown.
Well, because my thesis is entirely built on liquidity and network adoption. So that is what I'm always testing. So, is something wrong with that thesis? And the variability around the correlation to liquidity is driven by these other factors. Who's the buyer, who's the seller, and why, basically. So I concern myself less with that and more observational when it comes to that. But the real question is the thesis right about liquidity? Because if that explains 90% of the price movement of Bitcoin, I need to get that right because it's the single most dominant factor we've ever had in financial markets. So that's why I spend all of my time thinking about that. And then you overlay on top is my asset allocation right? I.e., is the network that I'm betting on or the token I'm betting on, is it having the growth that I'm expecting from it? Because if not, you need to have a serious conversation with yourself about, do you have a bag holder bias? Do you have all of those things? So really, I spend my entire time testing those two hypotheses. Is my asset allocation right? And my allocation to the asset class right, which is based on the liquidity thesis.
Do you sit there and question, maybe there's something else here that, again, liquidity is there, but prices are not moving in the direction that you want?
So again, liquidity has been relatively lackluster so far this cycle versus every other cycle. And that's given us relatively lackluster prices. So I don't really have an issue with that. If I overlay US total liquidity on total market cap of crypto minus Bitcoin, it's pretty much identical. So it's telling us liquidity has not gone to new highs yet, so crypto hasn't gone to new highs. And that's total liquidity, not rate of change. Yeah, it's not something that's concerning me in that respect, I think.
Yeah.
And also people don't realize that enormous amounts of those ETFs is actually just arbitrages. So they hold the spot and sell the CME futures. Some are doing the perps, not many do the perps, but that trade is gigantic. And that's where a lot of the volume comes from. So the total actual buying by institutions and retail, significant. But again, if we go back to the business cycle, people's free cash flows in the normal world outside of tech have not been great yet.
Right.
And so therefore you can't recycle those cash flows into markets. And so if my thesis on the business cycle is right, we'll see that rise significantly. If it's wrong, we won't. So we probably track in real time about 1,000 charts, of which we break down the business cycle to forward indicators, lagging indicators, and indicators that indicate where you are today. So when we look at a whole bunch of different breakdowns and rates of changes and all of that. So the work we do on this is huge, but all the work we do starts with the very top level is demographics is the driver of everything. We overlay demographics with things like debt to GDP, labor force participation rate, debt to GDP. All of these things show exactly where the economy is and why over the extended period of time, where trend rates of GDP growth are. Then it shows that all of this excess debt is being financed by liquidity, debasement of currency. Then you come to, okay, where you are on the business cycle, what's forward looking for liquidity, and forward looking liquidity is financial conditions. Financial conditions lead liquidity by about 6 months. And that's giving us a forward-looking lead on that. So we follow that very closely. Our financial conditions index is kind of a regression of the dollar rates and commodities. That leads well. Then we've got the global liquidity. So that's of all the regional liquidities based on both the government liquidity and their M2 numbers plus their bank liquidity. So we map out all of that. Then we map out all of the business cycle elements, which gives us forecasts for where inflation is going to go, where the business cycle itself is going to go, what's driving those. So we do kind of a huge ton of work on that. Then we overlay all the asset prices onto it. So we then look at, okay, what are the asset prices pricing in right now? So gold is pricing in current financial conditions. So it's actually leading versus, let's say, Bitcoin or the ISM. So that we kind of do this kind of multi-work from multi-decade secular trends down to where we are in the business cycle, on a regular basis.
I know as we look to wrap up, I'd like to get your thoughts on just general profit taking and what computes into your mind around that. And,
So generally speaking, I'll profit take towards the end of the cycle. Now, there's always a risk that you don't get that right. So how I try and think about it is to reduce the psychological stress. And maybe your stress is you take what's known as lifestyle chips off. So well before the end of the cycle, when you're sitting in some nice profits, you just force yourself to take some off. And that can fund the lifestyle things that you might need, that you will regret not having later if you miss the cycle, or you decide to run it through the full cycle, through the downside as well, which I've done most times because I prefer to do that. I prefer to buy and add in lows than trying to time it. So lifestyle chips is important. Nobody can dictate when you should take your lifestyle chips off, but you kind of know how your P&L feels to you and how upset you'd be if the cycle had ended then. Mm-hmm. And that's that psychological barrier you need to get through. And lifestyle chips, let's say you take 25% or 30% off, stops regrets. You might have regrets of taking money off early, but it's never the worst thing to have done. Yeah. And if not, if you want to take more off, like I'd take off significantly more risk or tell people to take off more risk once the business cycle's peaking, because that's when returns go down. Will I do that or not? Yeah, I'll probably reduce some risk. But listen, between what's happening in technology and crypto, this is the greatest macro trade of all time, and it's not over yet. So to try and get too cute with it is hard, and I'm able to stomach the volatility and have the cash flows to do it. So I don't need to do it. But for other people, just manage that risk because it's not easy.
What Raoul just explained cuts straight to the heart of where we are in the cycle. Liquidity is slowly, steadily returning, and every period of weakness we've seen over the last few months has been met with institutional buying rather than panic selling. ETF flows confirm it. Exchange reserves confirm it. Price distribution on-chain confirms it. Retail is uncertain, but long-term capital is absorbing supply at every dip. That pattern historically marks the beginning of an expansion phase, not the end of one. And this is exactly where his AI thesis ties in. As AI systems scale, they create exponential demand for compute, tokenized settlements, and digital scarcity. Things traditional finance simply cannot provide. Blockchain steps in as the economic backbone of this new machine-driven marketplace. The next timestamp dives into how this convergence between AI and blockchain forms a feedback loop of rising demand, rising liquidity, and rising valuations.
What is your kind of current thesis on AI?
So because I do so little trading, and I've got all the framework in place for the macro stuff that I do, I spend most of my time thinking, reading, doing, writing about AI. And so this is the greatest discovery humanity will ever make and the last discovery humanity will make.
Say more.
Well, after AGI comes, it is not us making the discovery, it is it.
Mm-hmm.
Right? This is the scaling of intelligence to infinity. Intelligence is what we have been paid our careers for. Our intelligence goes to zero in value over time. Doesn't mean we go to zero in value, but that particular aspect of what we do. So it is the most profoundly disruptive technology the world has ever seen. It is of civilizational level importance. Of the importance, it is the largest game of nations we will ever see played because nobody can allow the other side to win this. So more than nuclear proliferation, this endlessly scales. And so, I know people didn't like it when Sam Altman talked about government backstops. There is absolutely a backstop. There is not a single way the US or China would allow their industry to not succeed. So that's how big this is. It is economically the most disruptive force we've ever seen. It is a nuclear bomb when it comes to deflation. People just have no comprehension of how big this thing is. Almost the fundamental principle of the universe is to convert units of energy into units of intelligence. Literally everything we do and everything the planet does is basically that. So there is a flywheel here, and the flywheel is very clear. It's energy, compute, intelligence, creates more energy, more compute, more intelligence. This is the spinning flywheel of all of evolution and everything to do with this technology. So when you're looking at the different elements of the flywheel, we've got NVIDIA and others working on the compute side, but we know that that's not going to get us to the next level. We're going to go to whether it's biological compute or quantum compute or a combination of the two. That's where we're going, and we're seeing signs of that. On the energy side, that's our most pressing need right now. We can manufacture enough chips, but we don't have enough energy because you're going to stress the grids. So again, we go back to this is the most important race of all time to win. So look what China did. Yes, they're building nuclear, but they scaled more solar in 12 months than the entire solar supply of the rest of the world. They're telling you what the fastest source of energy is. The fastest, cheapest source of scaling energy is solar. The most efficient form of energy is nuclear. Mm-hmm. But nuclear the South Koreans are the fastest to build nuclear plants. They're about 6.5 years. But once you add planning permission and everything else, it's still an 8 or 9 year cycle, right? So if the US says, oh, we're going to just rely on nuclear, we got 9 years, not enough energy. So it has to be solar first. So solar is the only thing that you can scale fast enough. You've got the battery technology to be able to now reduce reliance on the grid. You're not removing from the grid entirely. What you're going to do is take, let's say, 60% of the new energy requirements off grid. The grid will supply the rest. Then it's natural gas. So you can get a natural gas plant up in about 2 years. So natural gas, so solar first, you can get that going in 12 months or less. You've got then natural gas behind it, but you need to be near pipelines. If not, you've got to lay pipelines. Planning permission could take years. So this is why Texas is hyperscaling energy right now, because they've got plenty of sunshine, plenty of natural gas, and low regs. And then nuclear comes behind it, but you have to start that nuclear thing now because you need it for 10 years' time. Because there's no way you're going to power something moving towards ASI without a combination of nuclear and the sun. I mean, I'm a big believer in the Kardashev scale anyway, which is 99.9% of the entire gravity of our of our universe is our sun, of our solar system for sure. So all of the energy held within that is more than enough for our needs. We just need to figure out the technology to harness it.
How do you think about the ratio of, one, the combination of the two theses, crypto and AI, and then more so the proportion by which you kind of position your portfolio?
So AI is not the most easily investable theme, really. We've got hyperscalers, but you're buying other cash flows in other parts of the business. So it's not a clear bet. Yeah, NVIDIA, but it's scary to be in a very, very crowded big bet. I get it. It's a great trade. I have no issue with that. But the nexus of AI and blockchain is huge. Blockchain is the technology rails by which all of this will operate. It's the new layer to the internet. As we roll out millions and then billions of agents, again, need payments. They need payment for what? Energy and compute, the same flywheel. So the energy and compute costs need to be paid, and maybe there's a profit margin if they're set up as businesses. And the instantaneous requirement for payments requires blockchain rails. Also, in a world of such deflationary forces, you need to have the ability to have scarce assets, right? Because in a digital world, nothing is scarce. So blockchain solves digital scarcity, which is a really important factor as we become increasingly digital. So these technologies are incredibly important, and they interact together. How do you invest in it? Your job is to basically look at one chart versus the other and say what's going to outperform over time. It has been, if you look at it, Bitcoin has outperformed, or the NASDAQ has underperformed Bitcoin by 99.97% since 2012. So it's been a one-horse race right now. I call it the supermassive black hole. Will that always be prevalent? Maybe not. But it's very difficult. There are some clear winners that have done better. So NVIDIA has done well over that time, stuff like that. So again, all I do with that bet is this is all the same thing. The world is about to become more digital tomorrow. And these are the two mega horses in that race. How do you allocate your capital between the two? Depends on your risk profile, and depends on, what has got the relative kind of attention thrust or momentum at any one period of time. This year, it's been technology stocks. Last year, crypto massively outperformed. So what do you hold over an extended period of time? A bit of both.
If you step back and connect the dots, the big picture becomes incredibly clear. Crypto markets are no longer driven only by speculation. They're being shaped by global liquidity cycles, institutional allocation models, and emerging utility from AI-driven financial activity. That's why corrections feel shallow, why dips get bought, and why liquidity-sensitive assets like Bitcoin and Ethereum continue drifting upward despite macro noise. The market is behaving like an early-stage bull cycle because we are in one. What Raoul emphasizes, and what most retail investors underestimate, is that crypto has evolved into a structural part of the global economy. Bitcoin is now a recognized reserve asset. Ethereum is becoming economic bandwidth. And the broader crypto ecosystem is maturing into a set of networks that handle computation, identity, storage, and payments. The speculative phase built the infrastructure. This phase monetizes it. Yes, volatility will always be part of this asset class. Yes, sharp pullbacks will still happen. But when liquidity fundamentals, technological adoption, and macro tailwinds align, the path of least resistance is higher. That's why Raoul calls this one of the most asymmetric opportunities of the decade. Not because prices will moon overnight, but because digital assets are now positioned at the center of the next wave of global economic growth. So the takeaway is simple. This rally is not random. It's not fragile. It's not driven by hype. It's the product of structural forces that are still in their early stages. If you want to stay ahead of these shifts and understand how institutional capital, technology, and macro trends shape the next leg of the market, make sure you like this video, subscribe to the channel, and drop a comment below on where you think Bitcoin is headed next. Thanks for watching, and stay tuned for more.